French mobile market is getting quite a bit of a shake-up these days.
Indeed it is. Hi there, Francois. Hi there, everyone. French telecom stocks, they've been rallying this Monday. It comes as Bouygues Telecom has agreed to sell its mobile network to rival Iliad, which operates under the brand Free. It's seen as a preemptive move to head off regulator concerns about Bouygues' proposed bid for SFR, another company. Analysts say the deal is seen as a plus for the entire French telecom sector. This as it would probably or most likely ease price pressures. Delano de Souza has more.
The map of the French telecom sector is being redrawn. Bouygues has agreed to sell its mobile network to rival Free for 1.8 billion euros. For Free, getting a hold of Bouygues' infrastructure means they will no longer be reliant on other operators.
Today we're at 8 million subscribers. Having our own network means we can double or triple this number from a technical point of view.
The sale includes 15,000 antennas and is seen as Bouygues' way of preempting French competition authorities. Competition concerns risk derailing the deal, as the combined entity would be a market leader with a market share of 42%. This will also reduce the number of telecom operators in France from 4 to 3. That was the case before 2012, and it's got consumer groups worried.
Consumers don't have a short memory. They know what the market was like with 3 operators and with much higher prices.
The French government is trying to increase investment in the sector and signals that fewer players could help, although it doesn't want to see prices go up.
If tomorrow they agree on a price, there will be a fine to pay the government. And also consumers will need to be paid every cent. That's dissuasive enough in telecommunications like everywhere else, not to work against the consumer.
Cable operator Numericable is also in the running to take over SFR. A board meeting by SFR's parent company Vivendi is planned for later this week.
Also this Monday, shares in Iliad got an extra push after it posted a sharp increase in yearly sales and profits. Overall, Iliad and its brand Free saw sales climb by almost a fifth to 3.7 billion euros in 2013. Its net profit was 42% higher, hitting 265 million euros. Free is the new kid of the block on the French telecoms market, and it was launched 2 years ago. At the end of December, its market share had grown to 12%. And here's a look at some other market winners this Monday. The American fruit company Chiquita is merging with the Irish rival Fifes. The combination of the two would create the world's largest banana supplier. The two companies together sell fruit and other produce for $4.6 billion every year. Current Chiquita shareholders will hold just over 50% of this new company. The deal requires shareholder and regulatory approval before it can go ahead. And that takes us to a look at the wider stock market picture this Monday. In the United States this hour, shares they are trading generally to the downside. McDonald's is one of the companies under pressure after it reported falling sales during February. The Dow Jones Industrial Average down run about 0.5% this hour. The Nasdaq and the S&P 500 down run about 1/3%. Now, the picture was much the same here in Europe at the close, with Paris CAC 40 being the only outlier, ending slightly above the flat line. Downbeat economic data from Japan and China are also putting pressure on global markets, and we're going to look at that in a moment. Before we do that, though, let's take a quick peek at those telecom shares that dragged the CAC 40 here in Paris higher. As you can see right there, Iliad shares up more than 11% on the session. Bouygues shares up almost 9%, whereas Numericable, the other suitor for SFR, saw its shares tumble more than 12%, a sign perhaps that investors appear to be believing in the matchup between Bouygues and SFR more than in Numericable's potential deal with SFR. We're going to take a look at that data then from China and Japan that's been putting a little bit of a dampener on trading worldwide. Chinese exports fell 18% in February in comparison to the same month last year. That fall was much sharper than expected, and it pushed China into a rare monthly trade deficit. Authorities blame the Lunar New Year holiday season for the weak result, but some analysts say it can't be the entire explanation, adding to concerns that the Chinese economy is slowing down. Meanwhile, Japan has posted slower than expected fourth quarter growth according to a revised batch of data. The economy expanded at a rate of 0.2% between October and December. That's in comparison to the previous 3-month period. It's fueling concerns that a massive effort by Japan's government to stimulate the Japanese economy lost steam in the fourth quarter. And here's another story that we're watching very closely for you. Shares in Malaysia Airlines hit a record low on Monday during the search for its flight MH370, the plane that was flying from Kuala Lumpur to Beijing when it disappeared early on Saturday local time. The accident is seen to be putting further financial strain on Malaysia Airlines. It's been suffering from tough competition from low-cost carriers, and its losses deepened last year. As I say, of course, a story that we're keeping a close watch on, that search for that missing plane. And with that, I'm going to hand it back to Francois.
All right, many thanks for that. Marcus Carlson with more business news later on. Time now for sports. Let's say hello to Dan Levy.
Hello.
Dan,